Good evening, students. Welcome to our LVRC class today. I'm sure by now you all would have definitely studied the subject and also done revision of various topics along with our classes and also at your personal end. So today we are going to deal with a very important part from the perspective of your exams. In this particular part, you will find that your exams are many times inclined towards questions from this part, and that is what is the importance. During your regular classes, you would have studied this in detail. Today, we are trying to look at the same topic from the perspective of exam, taking specifically the questions that you get during exams. So here we have tried to curate questions which resemble the questions that are asked in the exams so that you should be in a position to understand and to master how to tackle these questions. So once again, welcome. Good evening, everyone. Good evening, Barna Mandal. Good evening, Vishakha Goyal, and everybody all present over here. So let me start with the first question. So I uploaded this in our portal, but in case if you're not able to get it from there, you can just take a screenshot of this. Okay. So just take a screenshot of the first question right now. We'll discuss this, we will solve this, and then we'll proceed to the next question. Done? Screenshot. Fine. Should we start? Now, students, what is very important when you are tackling questions, especially exam questions, is the correct approach. Now, when I talk about these two topics which we are revising today, one is capital gains, one is other sources. It is important to understand that the questions for both these topics are given in the question as independent questions also. Independent means where the question will deal exclusively with this chapter only. And at times you will find the question from these chapters interwoven with other chapter questions. That is where the main skill is. In fact, in your entire taxation paper, specifically if I talk about direct tax, a very important skill that students you should develop at this stage only while practicing is being able to identify as to which topic that particular part belongs. So today also, when I will be discussing these questions with you all, my endeavor is not only to give you the answers that I will upload later after the end of the class today. So all question answers will be available for your reference. But my endeavor today is to give you that approach, how you should approach a question, how you should read a question, so that during exams, your answers are correct and at the same time, you are able to attempt maximum number of questions. Right? Fine. So with this backdrop, let us start. So generally, students, I suggest that whenever you get this type of question, this is what type of question we call them as MCQ type of questions, where a lot of data is given, and then after the data, questions are given. First, read the questions so that when you are reading the data, your first reading of the data itself becomes specific. Now, since you are well versed with the topic, reading the questions will not create any challenge because you'll understand what that question is saying. So it is not necessary that to understand the question, you should first know the data, not at all required. That you'll understand now itself. So how does the question goes? It says that based on the facts of the case scenarios, choose the most appropriate answer. So it is basically MCQ type of questions. First question is compute the amount of capital gain. Now, students, you have to be very specific what the question is asked. In our exams, the question may be asking the final income figure. The question may be asking the final tax figure. The question may be asking one intermediate figure relating to that. Like for example, in capital gain, many times you'll find question only asking you what will be the full value, what will be the cost of acquisition. They may need not ask you the entire final gain. So be very clear so that your answer, your attempt is perfect. So what is the first part of the question asking? Compute the capital gain chargeable to tax in the hands of Mr. Roshan for the year 26-27 AY. Fine. You need not read the figure, that is not required. Second, compute the income. Again, what is required is entire income under the head other sources, again in the hands of Mr. Roshan for the same AY. Okay, perfect. Now with this backdrop, let us start reading the question. Now, when you've read the requirement as to what specifically is asked, when you're reading the question, you can start marking that, okay, this will be required in part A of the question, this will be required in part B of the question. Maybe there and there itself, you can do some minor workings so that you in the first reading itself are ready for the answer. You have to simply compare the four options and check which is giving the correct answer, right? So let us start. So what is the data? Roshan, age 45, is employed as finance manager in this company. Transactions for the financial year 25-26 means relevant to AY 26-27 are given. Okay. So one thing is good that we do not have to segregate transfer as to past year or current year. All are of the current year only. Now, first, household LED and refrigerator, which was purchased in this period for this amount, is sold in this period for this amount. So there is some purchase sale. Definitely the difference would be profit and loss. My question to you all is, you may answer in short, like you can call it as HP, you can call it as S for salary, you can call it as OS for other sources, you can call it as PGBP or CG. So my question is, this first receipt falls under which head? You have to tell me the head. Many times, even in MCQ, that type of question is asked. See, I'm going in detail because along with revising this chapter, I want you to develop the approach. Because in this particular question, I've taken only questions relevant to the today's topic, but maybe you may get questions on any head. So I want you to be able to identify. So I'm getting answers as PGBP, other sources, other sources. Dhanlakshmi, but what you're saying cannot be, na? So either it will be CG or it will not be CG. You're saying CG but not capital asset, then how CG? Okay. Arun, where are you going? I'm still on the first part. You have jumped to, I think, second, third part. I'm only on first part. Students, the answer is this is not income in the first place. This is not income. Why? See, what has happened? Have you earned anything by doing job or service? Answer is no. So there is no salary. Is it a rental income? Answer is no. So there is no HP. Now the other three heads, possible three heads, PGBP, CG, OS. Now for PGBP, there has to be a business. Are you into a business? No, it is clearly saying you are employed. So there can be no PGBP income also. Now remaining two heads. Now for capital gain applicability, if you recall, we have discussed two requirements you have to check first. The very first thing that you have to ensure is there should be an asset, the asset should be transferred. Now, you have sold, so it means there is a transfer, correct? Question is, what you have sold, whether it is an asset. Now, capital asset is defined to mean property of any kind. So is it a property? Yes. Any kind? Yes. Movable, immovable, tangible, intangible, business, personal, correct? But there are exceptions to the main definition of capital asset. And the second exception, which is relevant over here, is movable personal effects are not to be regarded as capital asset. Now here, what you have sold is your household LED, and refrigerator. Are these movable personal effects? Definitely yes. Whether it will be capital asset. Now, interestingly, students, if you recall, so see, we are also revising the provisions in short. There are exceptions. That is, some personal effects will be treated as capital asset. You have jewelry, painting, work of art. Is it any of them? Answer is no. So effectively, these two items are not capital asset. Now, if they are not capital asset, now the question comes, if they are not capital asset, can it fall under capital head? The answer is no. So even capital head is gone. Now, the last head remains, that is other sources. Now, many times, friends, other sources is very tricky. Rather, many times we end up making a mistake. Why? We have an understanding that whatever is not falling in any forehead will fall under other sources. That is correct. But that does not mean anything and everything which is not in any other head, all the foreheads will fall in other sources always. No. So in this particular case, you have sold a personal asset. If this is not covered in capital gain, can it be covered in other sources? The answer is no. Why? Because for being taxed under other sources, again, remember one thing, other sources will cover primarily revenue incomes, and only two capital incomes will be covered, which are specifically mentioned over there. Other than that, no other capital income can be covered under the head other sources. Here, what you have sold is a property. So what you are deriving from it is definitely a capital receipt. It cannot be a revenue receipt. You'll agree to that. And because it is not a capital asset, so it is not fitting in capital gain. But it cannot fit in other sources as well, because for a fitting in other sources, there has to be a revenue income. And if it is not a revenue income, if it is a capital income, it should fall in one of the capital receipt mentioned in other sources. It is not falling there. And hence, finally, the answer is that this income is not a chargeable income under any head. So even if this sum would have asked any other heads amount, we would have still not covered this. So students, I hope you are understanding this. This is very crucial. I'm trying to give you the approach. Plus, I'm trying to revise maximum possible provisions. And I'm also trying to give you a thought process specifically relating to other sources, because for other sources, a very wrong notion many students carry, that anything and everything which is not falling in the four heads will be other sources. This is not correct. Fine. Let us proceed to the second item. Advance is received from Mr. Vanraj on 1st May 25 against sale of urban agriculture land, which was being used by his father for agricultural purposes during last 2 years and 8 months. However, due to non-payment of balance, the advance is forfeited. So originally you received advance. Receiving advance is not any head income. I hope you can understand this, because receiving advance cannot be income of any head. However, now when you forfeit the advance, then you are retaining that amount. Now the question is, what is the tax treatment? Interestingly, if you recall entire income tax law, then is this advance arising from your salary or job? No. Had it been, we would have covered it in that head itself. Second, is it arising out of your business or profession? Answer is no. Otherwise, we would have covered it in that head. Here, it is arising because you are attempting to sell a capital asset, and eventually that sale, that transfer did not materialize for some reason. So you had taken advance, which you forfeited. This is the reason. whenever you forfeit an advance pertaining to any capital asset, this date is very crucial. Yes, correct. Dhanlakshmi. Yes, correct. Gayatri, correct. Arun. So, what is the rule, students? Any advance forfeited before this date has an impact in capital gain chapter. Advance forfeited on or after this date has an impact in other sources chapter. Now, for the purpose of revision, I'll mention both. So, if this advance pertaining to this capital asset forfeited before this date, let us say here the date was this, then in that particular case, the impact of this would have been that your cost of acquisition of this land would have been reduced by this amount of advance. So whatever is your actual cost of acquisition, you would reduce 4 lakhs from there. So this is how advance forfeited prior to this date had an impact in the capital head. However, in our case, impact in other sources head. And what is the impact? The impact simple is this 4 lakhs is your income from other sources. Straightforward. No deduction, nothing doing. Correct? Moving ahead. Point 3 says the same land. So they are continuing the second point. Is eventually sold to Mr. Jain on 1st December. Now this date is falling in our financial year. So it is pertaining to our relevant AY, that is 26-27. This is sold eventually for 10 lakhs 50,000. The land was purchased on this date, right? It was purchased for 1 lakh 50,000. Now, what has happened because of this, students? The impact of this is that you have finally sold this land. Sale of land is attracting capital head because there is agriculture land. Most important, it is an urban area, so it is a capital asset. Had it been in rural area, the answer would have been different. But since it is in urban area, it is a capital asset. You have sold it, so there is transfer. So now the capital head is getting attracted. Now this you'll do in your working note, which can be the last page of your answer sheet. So full value. Now, again, see, I'm also revising parallelly just for your benefit. So provisions also get revised. So full value, students, if you recall, in case of land or building, there is a special section 50C, which says that whenever land or building or both is sold, then full value as per 50C will be higher of your actual sale consideration and the stamp value. If stamp value is higher, then you will make one more comparison, which is you will make 110% of your agreement value and then compare it with stamp value. And then finally, whichever is higher will be your final capital gain. Sorry, your final full value of consideration. Now here we have sold land. So 50C is applicable. But in this question, they have not given any data relating to 50C. So for us now, that is not a question to be checked. So for us, directly the full value will be the sale consideration which is available. From this, we'll subtract expenses on transfer, but that is not given. Second, we will subtract cost of acquisition. Now, just again for revision, whenever cost of acquisition has to be checked, students, you should try to explore two things because these are the two common adjustments relating to cost of acquisition. One, whether this particular asset was acquired by you under gift, will, inheritance. Because if that is the case, for you, the cost of acquisition is cost of previous owner, right? I hope you recall this. Cost of acquisition is cost of previous owner, but that is not the case. You yourself have purchased the land, so previous owner question is gone. Second important point is if this date of purchase would have been before 1st April 2001, then the cost of acquisition would have been actual cost compared with FMV compared with SDV, that is stamp duty value on 1st April 2001. And comparing these, you would have eventually come to the final answer, right? However, that is also not the case. So finally, students, our cost of acquisition is the normal rule, the actual cost. So I realize a capital gain of 9 lakhs. Now comes the next point. Is this the end? Answer is no, because something else is given. What? Mr. Roshan has reinvested in another agriculture land on this date, 9,50,000. Now, whenever you reinvest your capital gain, you have to check the possibility of exemption under section 54. Now, within 54, there are multiple situations. One is 54 for residential house, 54B for agriculture land. So here it is agriculture land. So we'll check 54B. 54B says that if you have sold an agriculture land, if you're individual HF, and most important, if that agriculture land was actually used for agriculture in past 2 years. Now here you have used for more than 2 years. So you are satisfying that condition also, that you have used it for at least 2 years before the transfer. If all these conditions are satisfied and if you're individual HUF, 54B says we will give you exemption if you have reinvested your money in another agricultural land within 2 years. Now we have invested it immediately. We have invested it on 10th March 26. So we satisfy all the conditions. Asset is individual HF, yes. Asset is agricultural land, yes. Asset has been actually used for agriculture for minimum 2 years before its transfer, yes. Is it reinvested in another agricultural land? Yes. And is it reinvested within time limit? Yes. All conditions satisfied. So eventually, you are entitled to 54B exemption. Now, exemption is the amount you invest or the capital gain, whichever is lower. So it is this. So finally, your taxable capital gain is nil. Right, students? Yes, you're correct, Garba. You're right. So if you want to utilize the entire 2 years period or wherever the 3 years period is there, so in that particular case, you have to deposit the money in capital gain deposit schemes before your due date of filing returns under section 139 bracket 1. So you are correct here, but that was not required, Garbo, because you have purchased it immediately, even before the end of the financial year or previous year. So students, this is the ultimate result of point number 3. Now, we were supposed to answer in part A the amount of capital gain itself. Our correct answer we have got, it is C. Yes, Garva. So that is where we check your case. That is, if you are depositing, you have to check the deposit should be made before the due date of filing returns. If not, then you may miss this benefit. Yes, Arun. So Arun, but a violation of any 54 section. See, firstly, if you have not satisfied the basic conditions, I will not give you the exemption in the first place. Second, you have availed the exemption now. Now, like for example, what Garva is saying, that I want to utilize my entire 2 years or wherever it is 3 years, I want to utilize my 3 years time limit of purchasing the new asset. But how do you utilize? Before your due date of filing returns, you have to actually deposit the amount in a special bank account that will be treated as your investment and you can claim exemption. So let us say this exemption which you are claiming here is not on the basis of purchase of land. Let us say this amount is deposited in capital gain deposit scheme. Now, Arun, coming to your point, now I have an obligation to complete the condition. What is the condition? That within the time limit allowed, like here in 54B, it is 2 years, and in your example 54F, it is 3 years. If I do not purchase, that is reinvest in the new asset within the timeline, then the problem will be whatever exemption, whatever benefit I have taken now, that will be withdrawn, which means, now answering your question, I have exempted this amount here in the current financial year. That is a year of transfer when I did this capital gain working. Whenever the 2 years or 3 years period expire in that year, if by that time I have not invested the money, that will be treated as my capital gain income of that year. So in other words, I saved tax in the current year by showing it that I will be doing investment. So I kept the money in a special bank account, but I did not utilize it correctly within the time limit. Then your point comes into picture, Arun, that what will happen if we fail to satisfy the conditions? The answer is whenever the time limit will expire or whenever you will breach any of the conditions which are attached to these exemptions, the exemption is withdrawn. This is what the law says, which simply means in that financial year, you will simply show like this. Let us say it is 28-29. What you will show? LTCG 9 lakhs into bracket exemption withdrawn due to. Now here you'll write the reason why this exemption is getting withdrawn. Due to what? New asset not purchased within time, or a wrong asset purchase, or the amount not properly utilized, whatever. Fine, Arun? That is another thing, Arun. So you are mixing two, three things. Don't worry. What you have asked or what you have just mentioned, that is another scenario. I'll come to that. But that is not withdrawal. See, you asked me what are the consequences of violation, right? So consequences of violation is this. What you're asking is, okay, I'll come to that. There's one question designed to cover your query, right? So students, I hope everybody's understanding. I'm trying to cover maximum possible provisions with the help of practical questions. So provisions are also getting revised and also you are getting the actual understanding of the approach, how to solve the question in the exam, right? Now, my second question was about other sources. So we have already identified one other sources income, which is 4 lakhs. We proceed. Next is you also received some interest of 40,500. Now, students, this is PPF account interest. If you remember, you would have studied that under section 10 bracket 13, sorry, not 13, 11. Whatever you earn on PPF, that is exempt, correct? Yes, you're right, girl. But that is if your amount of deposit was this amount, exceeding this amount, correct? And if I'm not wrong, it is for RPF. Garba, please check. It is the amount which is deposited in RPF. This is PPF, correct? And if again I'm not wrong, it is 2.5 lakhs and 5 lakhs. Arun, what are you asking? 3D, 9D, I'm not getting. So firstly, this is exempt. Now, next, he has paid 7,500 as premium towards life insurance. So this is section 80C, correct? Right now, we are not required to compute tax. We are not required to find out deduction. So this information is unnecessary for us, right? Arun, which is this section? This is what I am asking, Bida. You're referring to which section? This section, your numbering is 3B 90 for what? That is what I'm asking you. So this fourth point is not relevant to us. This is anyways exempt. So this is also out of other sources. So what is left in other sources is only 4 lakhs. Correct, students? So my answer of this question is 4 lakhs. Now see, just to confuse you, they have given this. What is this? If you just go through the question, you'll find that it is a difference of this. So they were just testing that if somebody wrongly has taken this amount as your amount of other sources income, then smartly what they have done in the question, they have taken this figure, which is a net of this. So somebody will say, okay, this is also other sources. This is also other sources. One is profit, one is loss. So net is this. See, very uh, smartly they have crafted this. Also, why they have taken nil? Because the only other sources income we have is advance forfeited. Now, if you are not well versed with the provision, you may not treat advance forfeit as other sources. In that case, your answer will be nil. So see how smartly the options are curated. It is not that they have taken any figure in the options. They have purposefully taken those figures which could be the likely answers if you are not having the complete and correct knowledge of the provision. Because many times what happens, if you find out some answer and that option is not there, you know that your answer is wrong, you'll recheck or you'll go back to the point. But very smartly how the examiner or the paper uh, setter will do it. They will purposefully take all the probabilities how students can think and what could be the different probabilities of applying the provisions, and purposefully they have taken those values so that in case by mistake you apply wrong provision and get one of these values, you may tick it because you are getting it there. So you'll feel that my answer is right. This is where taxation requires a proper, thorough revision so that you are able to retain all the provisions. Because if you miss any one of the provisions, then mistake happens in such questions. Fine. So now going to the next question, again the same approach. Now here what is asked, you have to again select out of the MCQ what? You have to find out what is the cost of acquisition of the residential house. So here they are not asking the amount of gain or loss, they are asking the amount of cost of acquisition. Then you have amount of capital gains. Here they are asking gain, and this is for financial year 26-27. And here the amount of capital gain, which is for AY 27-28. Okay. Just do one thing again. Take a screenshot of the information so that even if I'm scrolling the screen, you have the information in front of you for your understanding. Done? Clear? We proceed? Okay. Now we have to find out three things. One is cost of acquisition. Second is capital gain for 26-27, and then capital gain for 27-28. So let us start. Pankaj, an Indian resident, purchased a residential house property at Kanpur on this date. Now see, the moment the question is on cost of acquisition, they are going to give you all possible adjustments. Now here, the property is purchased before 1st April 2001. So we have to be now careful while determining cost of acquisition. Now they have given you the fair market value. They have given you the stamp duty value as on this date. So friends, your answer is here for the first part of the question, though we should read further because you may have advance forfeited and all those things, but at least first part of the answer is here. Now, what does the provision says? If property is acquired before 2001, what is the rule? The rule is you have to find out the cost of acquisition by taking your cost, actual cost, comparing it with two figures, FMV, SDV, both of 1st April 2001, and take firstly out of both whichever is lower, compare it with actual cost, take out of this whichever is higher. So FMV, SDV, both these figures as on 1st April 2001, I have to take whichever is lower. So my lower figure is this. The first step I have to take lower of this, that is this figure. Now comparing it with actual cost, and I have to take whichever is higher, that is this. So finally, my COA has, for the time being, come to 25 lakhs. Students, I hope this is clear. Yes. Everybody is able to recall the provision. Garv, cost of acquisition is indexed only at the time of tax computation, and that also in one specified case. So yes, while you are computing capital gains, we have to keep indexation aside. Why, Garv, you are going into shares, price of shares? I did not get your point, Garv. What you are mentioning about shares, I did not get. Okay, students. So for the time being, my COA is this. Let us proceed. If we find anything else relating to COA, that will be adjusted here. Otherwise, this will be our final answer. Now, on this date, Mr. Pankaj entered into an agreement with Mr. Gyan for sale of this property for 61 lakhs and received advance of 2.5 lakhs. Great. However, as Mr. Gyan did not turn up, Mr. Pankaj forfeited. So here within cost of acquisition, you also have the adjustment of advance. But again, for advance, what we discussed in the previous question, you have to check here when this happens. What is our cutoff date? Cutoff date is 1st April 14. And when have you taken and forfeited it? After this date. Now, the moment you do it on or after this date, it becomes other sources income. There is no impact on cost of acquisition. So even after this adjustment, my cost of acquisition remains same. Correct? So you can find out or tick out the answer. So the answer is 25 lakhs. Correct? Yes, Garva, I understand you are recalling provisions. That is good. But which provision you are recalling? There is no such provision relating to listed shares. That is why I was a bit confused. Okay. Let me know which provision you are talking about, Garva. Mention the section number or the reference because there is no such provision what you have just mentioned. Okay, proceeding further, students. Now we have to compute capital gain of 2 financial years, financial year 25-26 and 26-27. Now what has happened? In this financial year 25-26, Pankaj has finally sold this property to Rohan for 1.5 crores. Now what is this property? This property is your house property. And since it is a building, again, for deciding full value of consideration, what triggers is the provision of comparing it with stamp duty value. Now your agreement value is 1.5, stamp duty value is 2, stamp duty is higher. Now if stamp duty is higher, you do not directly take stamp duty. What you do is you compare this. You compare this with stamp duty value. Now this is 1.5 crore, make it 110%, 1.65 crore. Now out of this, still stamp duty value is higher. So now finally, as per 50C section, your full value will be 2 crores. Right, students? Clear? Understood? Pakka? No doubts? Great. So all are with the flow. Further, he purchased 2 residential properties. Now this part is for what? This part is for exemption. Now what are we supposed to find out? I'm sure we would be requiring to find out taxable capital gain only. Yes, taxable capital gain. Now we have to check for exemption. Now which exemption they are asking us? 54. 54 is if resident, if individual or HF has sold a residential property and has reinvested in another residential property, it is allowed. Correct? But before that, we have to first complete the computation. What was your cost of acquisition, students? 25 lakhs. 1.75 crore. ठीक है? Yes, Harshal, you're right. Now, we check for the eligibility of 54 exemption. You should be individual HF. Yes, you are individual HF. Second, what you have transferred should be residential house. So yes, what you have sold is a residential house. You should have reinvested in residential house. Fine. They have given reinvestment as properties, house properties only. Now comes the important point, that is date. Now we all know that for section 54, what is the time limit for reinvestment? For purchase, it is 2 years forward, 1 year backward. And for construction, it is 3 years forward, right? I hope you recall this. However, even for this, that is 2 years forward for purchase, You can utilize this time limit of 2 years or 3 years only by first depositing the amount which you want to reinvest in future in the capital gain deposit scheme. If you fail to deposit the amount in capital gain deposit scheme, then even though you make investment in future within the 2 years, 3 years timeline, exemption is not allowed. Now, what is the due date for filing returns for this assessee? It is 31st July. Now see when the investment is done. He purchased two houses, one in Delhi, one in Mumbai, for 57 lakh each. When is he purchasing? He is purchasing it after the time limit. What is the time limit? Yes, you have 2 years, 3 years, but before that, before the due date of filing of returns, you should have invested or deposited the amount in a special bank account, which this person has missed, because of which exemption under 54 is not applicable. Taxable capital gain is this. Students, please check if you're understanding this. Because many times we directly take the figure, we subtract it, but that may not help. Correct? Good. So my final answer is 1.75. Now, they've asked me to compute capital gain of the next year also. Why? So what has happened further? On 31/1/27, which falls in the next financial year, that is 26/27, Pankaj decided to sell the property at Mumbai. So here he had purchased two properties, Delhi and Mumbai. He decided to sell the Mumbai property to his brother for 58 lakhs, from whom 2,500 was received in cash on this date. And the balance was received later. Interestingly, sale deed was signed on this date. So here they are now trying to test your other knowledge. Garva, why this is the case? So friends, whether selling property to your relatives is not taxable under capital gain? Yes, selling property to relative is not taxable under capital gain. Correct. Perfect. Then Lakshmi, Arun, you both are correct. It is taxable. Aditya, again, why other sources comes? How is this point going to other sources? So the answer is you sell to anyone. Once the capital asset is sold, it is a transfer. It is liable to capital gain only. Right? Now the most important part. What is that most important part? That here, again, what is sold is a building. So again, stamp duty value has to be taken. But now you are having two stamp duty values. Now, while comparing our price, we should consider which stamp duty value, because the answer can change. So which stamp duty value has to be taken, students? First, stamp duty value on the date when you receive the advance. Second, stamp duty value when the final sale deed happens. Okay, good. Dhanlakshmi, correct. Arun, correct. Garva, Gayatri, correct. Correct, Arun. Very good, Dhanlakshmi. Yes, Garva, right. So answer is you have to take the date of the sale deed. That is in this case 64 lakhs will be taken. But actually the law wanted you to take this. But the problem is when we will take the stamp duty value applicable on the date on which you were entering into the contract or agreement, if the advance which you have paid is not by way of cash or bearer check or mere cross check, it should have been by way of account pay check or draft or by way of any online medium or internet banking or debit card, credit card. If payment of advance would have been by one of these mediums, we would have taken off the date of agreement to sell. But since it is not the case, hence we have to take the date of registered sale deed. So now for comparison, again I have to take 110% of this, comparing it with stamp duty value. Stamp duty value is 64 lakhs. Now while comparing it with this, 58 lakhs is my original sale price. Add 10% to that. How much it will become? It will become 63.8 lakhs. And now the answer, I'm sure you all know, is this. So now my FVC is 64 lakhs, right? Now comes cost of acquisition. Now students, just pay attention because now I'm going to also give you one more point. What is that point? You had purchased this property of Mumbai here, and this you had purchased in order to get Section 54 exemption, which eventually you could not get, right? Now let us just change some facts for revising one more point. Let us say here, whatever investment you did in the house property, out of 57 lakhs, you got exemption of 50 lakhs. Let us just change the facts. So you made investment of 57 lakhs, but you got exemption of 50 lakhs. Add this being the case, when now you sell the same property, I repeat, you sell the same property, which property on which you claimed exemption earlier, that is the reinvested property, then the cost of acquisition would have been this today. That is the actual cost minus whatever was allowed as exemption. Actual cost minus exemption under 54. Had you been allowed the exemption then, right? So remember this point also. So if by reinvesting you get the benefit of exemption under 54, 54B, etc., then there is another restriction which Arun was mentioning earlier, that this property should not be transferred within 3 years. But if you transfer, what are the consequences? While computing capital gain on this new property, which you had purchased for getting exemption, you got the exemption. And if you retransfer it within 3 years, the consequences will be this. Your cost of acquisition will be reduced by the amount of exemption. Now here, coming back to the original question, since my exemption was not allowed here, there was no exemption. So still I apply the same rule, cost of acquisition minus exemption, but the exemption allowed was nil. So nothing is subtracted. My final cost of acquisition here would remain the same. That is 57 lakhs, because here the exemption allowed is nil. So 57 minus nil is 57. So my capital gain is 7 lakhs. So students, I just modified a part of this question to give you the peel off the other provision also, which may be asked in some other case. Yes, Dhanlakshmi, you're right. Now, whether this is long-term, short-term, for which again you'll check the period of holding. This new house, if it is held for less than 2 years, that is 24 months, it will be short-term. If this is held for more than 24 months, it will be long-term. But here it is short-term. Correct, students? So we got all the answers. Gayatri, anyways, Delhi house exemption is not allowed. You're not allowed exemption of any house. No? So whenever in future you will sell Delhi house, Gayatri, again same treatment will happen. Whatever is your sale price minus cost of acquisition will be full 57 lakhs. Correct, Gayatri? Now, I come to Aditya's point. Students, in this same example, keeping everything same, what is the point? Pankaj sold the house property to Gaurav. We saw the tax implications in the hands of Pankaj. He got this capital gain, that is 7 lakhs, for which his full value of consideration was 64 lakhs, which we derived by this mechanism under 50C. My question to you is there any implication of this same transaction that Pankaj has sold the property to Gaurav? Is there any implication in the hands of Gaurav? Can there be any implications in the hands of Gaurav? Because see, in this question, it is not asked, but you never know. Same question may come and they ask you from the side of Gaurav. Then Lakshmi, the question is, with the same facts that Pankaj sold the property to Gaurav at a price, you are given the stamp value also. My question is, could there be any impact in the hand of the buyer, that is Gaurav, in the same facts of the case? Good, Garva. Good, Arun. But Garva, just think for a minute. Your suggestion is correct, but something you have to think of. Arun, can you tell me the amount, even Garva? So Dhanlakshmi, so what is the final outcome? So you are also now on the right track. So now you are getting what I'm trying to hint. No, Gayatri, there is no clubbing here. Okay, okay. Dhanlakshmi, how did you get this amount, beta? So Harshal, what is the impact of what you mentioned? So friends, interestingly, in the hands of Gaurav, you have to check implication under the head other sources. We'll ask, sir, how other sources? What is the connection? See, now look at the same transaction from Gaurav's point of view. Gaurav has purchased a property and the property is purchased for less than stamp duty value. Even after making your value 110%, still the stamp duty value is higher. Now, whenever this happens, that you purchase an immobile property for a price which is less than the stamp duty value, and your purchase price, even after making it 110%, is still less than stamp duty value, then section 56 to 10 gets attracted. I'm talking about Gaurav. And what is this section? This is the section which we commonly refer to as gift. Now, from the perspective of other sources, what does other sources say? Either you receive it free, then also it is gift, or if you purchase it, but you purchase it for a price which is less than the stamp duty value, and even your price, purchase price after making 110%, it's still less than the stamp duty value. In that case, friends, the difference between the stamp duty value and your purchase price, which in this example is, now again, stamp duty value is this one, same rule. We will not take this stamp duty value. Why? Because the advance was paid in cash, so that is not accepted. Same rule is in other sources also. So the stamp duty value to be taken is 64 minus purchase price 58. This could have been the income from other sources. But finally, this is also not going to be income from other sources if I have to give you the final answer. But this could have been income from other sources. Why? Because even purchasing a property for less than its stamp duty value is treated as benefit or gift because you have purchased for a lower price. And if that gift is exceeding 50,000, which it is 6 lakhs, but is exceeding 50,000, this could have been taxable in the hands of Gaurav, but it will not be. Why it will not be? Because Gaurav has purchased it from his brother, who is a related person. Now, in gift, there are some exceptions. So, whenever you are receiving something free or you are purchasing something for less than the normal value, it is gift, as we just discussed. But if this gift is received or this benefit is received from a related person, we will not treat it as income and will not tax it. Similarly, if you receive anything on the occasion of marriage, that is not treated as income. So here, this will finally be not taxable in the hands of Gaurav. Why? Because Gaurav and Pankaj are related persons, and any gift received, any benefit received from related persons is not treated as taxable under the head other sources. So in this case, finally, the answer that in the hands of Gaurav, nothing will be taxable because he has received this benefit, this gift from his brother. Yes, if Gaurav and Pankaj would not have been related, then this 6 lakhs would have been taxable in the hands of Gaurav as income from other sources. Right, students? Clear? Everything pertaining to this? See, already it is asked. I missed this question. What is the amount taxable in the hands of Gaurav? Correct? 6 lakhs, Arun beta, could have been gift if Arun and Pankaj, sorry, Gaurav and Pankaj were not related. But since Gaurav and Pankaj are related, this 6 lakhs is also not gift. So finally, the amount taxable in the hands of Gaurav is nil. This is what I just mentioned. So nothing is taxable in the hands of Gaurav because they are related. So the answer is nil. Clear? Understood? Any doubts? Any questions, students? Any questions? Lakshmi beta, 10% is this. What we just checked. 10% is for checking whether we should treat the difference as gift or not. 10% is never the answer. The answer is your stamp duty value minus purchase price. But whether we should consider this as gift or not, for that, you have to first make your purchase price 110%, compare it with the stamp duty value. If the stamp duty value is still higher, it means there is gift. What will be the gift? Stamp duty value minus purchase price. And now compare it with 50,000, because if this difference is less than 50,000, again, it will not be taxed. But if the difference is more than 50,000, then this entire difference, which is 6 lakhs in our case, would be taxed. Right, then Lakshmi? No, Gaurav, that does not affect. Aditya, I did not get the short forms, what you are using, DTR, OPT. What is DTR? What is OPT? Yes, I've unmuted you.
Sir, what is in capital gains? What is the difference in deferred tax regime and optional tax regime in capital gains, sir?
Sorry, but you are not clear. What is the difference between?
Deferred tax regime, optional tax regime in capital gains, sir. Capital gains.
There is no difference, beta. There is no difference. These provisions are same in capital gain under both the regime.
Okay, okay. Thank you, sir.
Yes. See, if this 110% is higher, let us say this 110% comes to 65 lakhs. And now you compare with stamp duty value, now this 110% is higher. It means there is no gift income. So in order to be taxing it as gift, you have to first check whether the agreement value, which is taken as 110%, is lesser than stamp duty value. So if this 110% is lesser than stamp duty value, which is the case over here, then only the difference can be gift. If this 110% is higher than your stamp duty value, nothing is gift. Clear? Perfect. Chalo. Let us proceed. I can just take a screenshot of the students. Yes, mark this. Take a screenshot. Just yes, let us continue. Harshal, if somebody is giving you cash gift of 55,000, then entire 55,000 will be treated as income and taxable if it is received from unrelated person. Correct? Now, again, read what is the question. Question is compute total income. Right? And now they have given if he has opted out of the default tax regime. So it means you are in the old scheme. Let us read the question. So, Mr. Vishal, aged 33 years, submits the following transactions for the current year. Mr. Vishal had a house in Delhi during financial year for 24-25. He had transferred the said house to Miss Deepika, okay, daughter of his brother, without consideration. Okay. So you have already transferred this house, and that is transferred without consideration. That is gift. Now, whenever you gift a house, is it a capital gain? Answer is no. Now, house would go back to Mr. Vishal. Okay, so I'll get back this house after the lifetime of Miss Deepika. Okay, so in case Miss Deepika expires early, I will get back the house. The transfer was made with a condition that 10% of the rental income from such house shall be paid to Mrs. Vishal. Okay. Students, first let us make out something from this part. So I had a property which I had given without consideration to someone, and I am not going to get back that thing during the lifetime of that person. Up to this point, it is not even covered in clubbing. However, the moment this line comes that I have given away the asset, which I'm not going to get back during the lifetime of that person, but there is a condition that the person has to pass on some part of the income. Now, if there is some part of the income which the transferee has to pass on to me, then clubbing will attract. And clubbing will attract for the whole income and not only the part of the income which is to be transferred back to me. So this is what is the special point, students. So this point is related to clubbing part. So what is the point? That since some part of this income, this assets income arising in future will come back to me, the law says we have to club the entire income. So this is my first income, which will go to the HP head and it will be taxed to me. So I have to consider it in my computation. Then Mr. Vishal holds preference shares in Messrs. A Private Limited. He instructed the company to pay dividends to Miss Chandni, who is a daughter of his servant. Now again, students try to recall, again, this is relating to clubbing chapter. So I am still holding the shares. So the asset belongs to me even today. But I have asked the company to give away the income arising on the asset to someone else. So I have shifted the income only, but I have not transferred the asset. Again, this is the case falling under clubbing, and whatever dividend is received by Chandni will be taxed to me, and this will be my income from other sources. So, first, second, both deal with clubbing provisions. Here, you need to have a thorough understanding of clubbing provisions in order to get a correct answer. Then, what else is given? Vishal has a short-term capital loss of 16 and a long-term capital gain of 15. Okay, so this is part of set off. And other incomes of Vishal are interest from saving bank account is other sources. You have to just remember there is a deduction under section 80 TTA. Then cash gift of 75,000 received from daughter of the sister on birthday. Yes, students, tell me whether this cash gift will be income or not. Dhanlakshmi, why so? So yes, main question is your sister's daughter, whom we call as our niece, whether my sister's daughter is my related person. Garva says niece is not related. Vishaka says not related. Aditya, where this comes from, I don't know. Varna says not related. Harshal says related. My question is whether niece is related for the purpose of gift. Yes, in actual life, niece is related. For the purpose of gift, yes, as rightly pointed out by many, niece is not a related person. Now, since niece is not my relative as per gift, hence, in this particular case, this amount, since it exceeds 50,000, will also be my other sources. Income from betting, also other sources. Income from card games, also other sources. Now there is a loss on maintenance of race horse. This is other sources. But what I've written, cutoff is not allowed. I will have to carry it forward. So Aditya, what was better 10%? I did not get that point. Huh? Please clarify. So the rule is whenever you are having any loss from maintenance of race horses, that can be set off only if you have income from same activity, that is maintenance of resources, which I'm not having. So eventually this loss cannot be set off. So Aditya, but I'm just asking that only. Where is that gift percentage given or the tax percentage on gift given? You are saying the tax on gift is 10%. Please check where it is given. Yes, coming back students. So this loss has to be carried forward, and yes, rightly pointed out by many, it will be carried forward for 4 assessment years. Correct? So let us take up this question, students. We are supposed to find out income. See, this also you have to be clear. What does the question ask? It is not asking you to compute tax liability. So unnecessary, do not waste time in that. The assessee is Mr. Vishal. If nothing is given, you should assume ROR AY is 2627. Income from salary, nothing is there. Income from HP will go to a working note. Nothing is there. Now in capital gain, we don't have to do any type of computation because they have directly given you the figure of capital gain and loss. So there is a short-term loss 16, long-term gain 15. Can it be set off, students? Again, Aditya Beda, where you are taking this provision 50,000 is exempt. I think we discussed in the previous point itself that when the amount exceeds 50,000, the entire amount is taxable. 50,000 is never deducted, Aditya. So 50,000 is only a criteria for checking whether the gift will be taxable or not. If the amount exceeds 50,000, entire amount is taxable. You do not deduct that 50,000. Correct, Beda? Yes. So coming back to my point, I have a short-term loss of 16. I have a long-term gain of 15. Can I set it off both? Are both of them set offable? That is, can I set off short-term loss from long-term gain? Garva says yes. Harshal says no. What about others? Then Lakshmi says yes. Garva says no. Yes. 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 Okay. Answer is yes. The restriction is on long-term capital loss, that it cannot be set off from short-term gain. It can be set off only from long-term gain. But that restriction is on long-term capital loss. When it comes to short-term capital loss can be set off from long-term gain. The balance of 1,000 of short-term capital loss can be carried forward. GTI less. Now, since we are in the old regime, because we have opted out of the new scheme, so this deduction is applicable to me. And then finally, I'll get my correct. Before I do calculation, I should mention about clubbing because presently I have already transferred the asset, but still I'm including that income. Why? Because of clubbing. So I'll mention that here. Even though the house property is transferred irrevocably, because I'm not going to get it back during the lifetime. However, since some part of benefit or income from the asset will accrue to the assessee indirectly. Why indirectly? Because assessee is not going to get this, assessee's wife is going to get this, but indirectly that is a benefit. Hence, the entire amount of income is taxable to the assessee because of clubbing provisions. Now, once it is taxable, you go by the working GAV minus municipal tax, NAV minus standard deduction minus interest. This becomes your HP income or loss as the case may be. Now I have received how much, means how much she has received. The rent received by Deepika for the whole year is 550. Now I'm sure you all recall the computation of GAV. You compare your actual rent with the expected rent. But here expected rent is not given, so I will take my actual rent. Municipal tax is not given, so we take it as nil. You have to always remember, whether given or not, you have to always take 30% as your standard deduction. Correct? Nothing of interest, nothing is given. So 385. Is this correct, students? So I've got my first figure. It is 385. So I come to the second part. Now in other sources, I have dividend, I have saving bank interest. Correct, na? What else do I have in other sources? This is done. Dividend was there about cash gift. Okay. Then betting, card game. Okay. All are there. So cash gift 75, betting 25, card game 46. Loss from maintaining race horses. I'm writing not applicable. Why? Because it cannot be set off here. It is 175, and how much was dividend? Dividend was 450. 175. So, how much is the total? 1 lakh, 275, 675, 725, and 781. Is it correct, students? People are saying 771. Correct. This 71. Yes, it's 771. Cannot be set off against other incomes. Correct. Now, GTI is 771 plus 385. So how much it is? 1156. Am I right? Now, ITTTA, interest on saving bank account. Now, if the person is senior citizen, you have up to 50,000. Here is any age given of Mr. Vishal. Yes, 33 years. So he's not senior. So if it is not senior, then is this correct, students? Wherever it is TTA, because TTB is for senior citizens. So it will be 80 TTA. Perfect, students, understood by all? Clear? Everybody got all the points? Clear? No doubts with everyone? Yes, Aditya.
Sir, 80 sir, saving bank interest can be save in
Sorry. I cannot hear you clearly. Sorry.
sir, I'm audible.
You are audible, only voice is not clear. Tell me.
Okay, sir. The saving bank interest can be transferred to 80 but how we can take in 1,70,000, 75,000 in other source, sir?
Why? Because
It
saving
has,
bank received is 71, 75 only, na?
yes, sir, but it transferred to 80 sir, 80
So, beta 80 TTA will give you deduction here, na? So, you are sure it is not exemption. Had it been exemption, you would have subtracted from here itself. What do you mean to say we should take this as 165? This is what you are saying? What do you want
Yes,
to
sir,
say? I
but
did not get your point.
sir, 80 have to be 10,000, na? That is the point, sir.
So, we have deducted 10,000, na? 80 TTA.
Yes, sir, yes, sir.
So, what is your doubt? I didn't get.
Sir, already we mentioned that 1,75,000 has to be 80 comes for deduction for 80 That's a doubt, sir. Question.
But I'm still not getting your doubt. So, I have received bank interest of 175. That is correct.
Yes, sir. Yes, sir. Deduction for 80 we mentioned that, sir. That is
So I mentioned for my remembrance na that I'll have to take deduction under 80 TTA. So what you want to ask, I'm not getting your question.
sir,
So
that's
I
the
mentioned,
question, sir.
better so for my remembrance, when I'm reading the question, it is my habit. I write things whatever is applicable to that point, so that when I am solving, I will not miss out.
Okay, sir.
So we
Okay,
have
but
na in 80 TTA.
deduction.
Here we have deducted, na,
Yes, sir. Yes, sir. Yes, sir.
correct?
Correct, sir. Correct, sir. But
Yes, Arun.
Sir, actually, I have one doubt. Okay, I'll already interest is more than 1,75,000. As per the TDS law, if exceed 1 lakh, are they going to deduct TDS, right?
But for TDS, beta, the person who is paying interest should be other than individual HUF. If individual HUF should be liable to tax audit, maybe that may not have been satisfied.
Sir, bank, okay, actually, sir, even in any case, 1 lakh if exceed, okay, in case, sir, but they didn't mention anything. They received from the bank, otherwise, individual HUF.
Correct. So even if they have received from the bank, but in TDS, if you remember, there is a form. If you fill and
Yes,
give
yes.
15H and 15G, they will not deduct.
15
So,
HUF,
so
okay.
in the question, they have not given that TDS is deducted. So we'll not take that.
Sir, means we need to assume that it's a gross.
So you have to assume that only. It cannot be taken as net. Wherever it will be net, that is TDS is deducted, they will mention in the question net of TDS.
Okay.
So remember
Sir, I
this,
have
it's
one.
a good point. But you have to
Yes.
remember this, they will always mention net of TDS. Yes, tell me,
Sir, I have one more doubt.
please.
Sir, I confusion with okay the clubbing transaction.
Uh,
Sir, I saw that there is a similar transaction at trust means someone is created. I mean, husband is created trust and okay some composition means some return is getting transferred to the wife. That case only that proportion the what amount the wife they going to that proportion only they going to tax. Otherwise, entire amount.
See, there are two different provisions. Here, what you are saying is a different clubbing provision where the person has gifted any money to wife or any property to wife and wife is earning income on that property, right?
Yes, sir.
Now, whenever wife is earning income on any property which is gifted by the husband, the
The
entire income which the wife is earning is to be clubbed. But that is the clubbing in relation to spouse. See, I'll show you if you are having confusion. So I've kept that open for your reference. See, where you have transferred anything to wife without adequate consideration, then entire income arising from it will be clubbed.
Sir, actually, my question is different, sir. I told, okay, okay, there's some trust. I transfer to the someone is XYZ, but okay, it is a irrevocable trust. Means, but some proportion of the income it transfer to the my wife.
So, beta, so that's what I'm saying. In that case, you'll fall here. Income arising from transfer of asset for the benefit of spouse or son's wife. So you fall here. You created an trust. You transfer the asset to the trust, and you are asking the trust to pay the income to your spouse. Correct?
Yes, yes, sir. I'm asking the okay, what's the amount my wife they going to receive? That only the club, a club going
No,
to club.
entire
Otherwise,
amount. See
entire,
what is given.
entire.
All income. See, you may be today withdrawing only 50%. You may be asking them to pay only 50%, but that makes no difference.
Okay,
The
okay, sir.
entire income that they are earning, the trust is earning from the asset which you have given to them, entire income will be clubbed.
Okay, sir. Got it, sir.
Understood?
Yes, sir.
Perfect. So students, hope this clear. So your entire doubts relating to this question perfectly understood by all. Now, after the break, we'll be solving this, but in the break time, you can just go through this question. So I've kept it open on the screen. I'm taking a break. You will, in the meantime, go through this question, make out your answers, and we will discuss it post the break. Thank you. Now, what is the question, students? Mr. Asif bought a vacant land for 80 lakhs in March 2005. So this is after 1st April 2001. So that issue is resolved. Registration and other expenses were 10% of the cost that will get added. He constructed a residential building on the said land for rupees 100 lakhs in the financial year 6-7. Now, he entered into an agreement for sale of the above said residential house with Mr. Hari, who is not related, in July 25, which is our current financial year. The sale consideration was fixed at 600 lakhs. On the date of agreement, Asif received 20 lakhs as advance in cash. So again, this date will not be considered for stamp duty value. The stamp duty value on this date is 620, which will not be considered. The sale was executed and registered on this date for the agreed consideration. However, the stamp duty value have revised the value, and the value of for the purpose of stamp is this. Mr. Asif paid 1% as brokerage on sale consideration. Subsequent to sale, Mr. Asif made investment in ICAI bonds, 45 lakhs on this date, 15 lakhs on this date. Compute capital gains. Okay. So, students, this is the question exclusively on computation of capital gains. Garva, again, what you are saying is right, but beta, I will repeat. Indexation you will do only when you are doing tax computation. Right now, at the time of computation of capital gain, there is no provision for doing indexation. It will always be done without indexation. Is that clear, Garva? So, computation of capital gains. Sit. Now, FVC, which is under 50C, we will write a note for this. Expenses on transfer. Fine. Now, working note 1, calculation of full value of consideration. As per 50C, if stamp duty value exceeds 110% of agreement value, then FVC is equal to stamp duty value. Also, stamp duty value on the date of agreement shall be considered if advance is received by account pay, check, draft, or approved online medium. In this case, it is received in cash. Hence, we shall consider stamp duty value on the date of registration. Correct? So, 110% of agreement value compared with stamp duty value. 600 is your agreed consideration. So 110% of 600, 660 this one. So it is 670. Therefore, SDV is FVC 670 lakhs. Now, brokerage is 1%. How much was our sale consideration? 6 lakhs. So 664 is the net consideration. Now, we had purchased the land for 80 lakhs, which was before 1st April 2001. So 80 and 100. Now, is this correct, students? Do you have this? Students, indexation will never be considered while computing capital gain. Keep this in mind. Indexation you will do only at the time of tax computation. So wherever in the question you are asked to compute tax liability, at that time, if the asset is individual HAF, if the asset is land or building, you will consider indexation as an option. But while doing this calculation of capital gains, no indexation at all. Oh yes, sorry. I'm really sorry, students. I missed this point. There is 10% registry cost. So 476. Yes. What is 663, beta? Okay. Now again in the question, we have something about reinvestment. You reinvested in NHAI bonds. Now for this, as rightly pointed out by many, the eligible exemption is 54 EC. But first check, to whom is 54 EC available? You are individual. Is it available to individual? Yes. What should be sold, land or building? Is that sold? Yes. It should be long term? Yes. You should have purchased the notified bonds. NHAI is a notified bond? Yes. Now what is very important is it should be purchased within 6 months. 6 months of transfer of asset. If it is purchased within 6 months of transfer, only then it is allowed. Is your period within 6 months? July 25, when is the investment made? And then this date. Yes, students. Is it within 6 months? That is what I'm asking. So how will you check the limit? I'm asking for the limit only, students. Arun, that 50 will be the next part. My first question is it within 6 months? Now, what is special over here is agreement to sell has happened in July 25. Sale deed is executed in this date. Now, firstly, what is the date of transfer? Students, please understand the nitty-gritty of the question because we have to count 6 months from the date of transfer. What is the date of transfer? Is it this date or this date? The answer is this is not the date, this is the date. Now, from this date, you will count 6 months. Correct? So, all investments up to August, 10th August 2026 will be eligible. Correct? Now, there are two investments, one of 45, another of 15. Both are made before 10th of August. So, both are eligible. Now comes the limit which you all are mentioning. So, minus 54 EC, 45 lakhs plus 15 lakhs. Now this total is 60 lakhs. However, here what I will consider is 50. So finally my taxable LTCG is yes. Is this clear, students? Arun is saying filing date is 31/7. Arun, please remember one thing, beta. For the purpose of this particular 54 EC bonds, that is not relevant. You know why? Because that is relevant whenever you are depositing money in capital gain deposit scheme. Here we are not depositing money in capital gain deposit scheme, and hence that restriction of due date of filing returns will not apply. Right, beta? Understood, but good point. Perfect, students. Clear to all? Chalo. Go through this. Find out the answer, students. You have to first find out the answer, then I will solve for you. Chalo, give me the answer, students. Dhanlakshmi has raised a good question. What if the advance is paid by the approved medium? Whether it will affect the transfer date? Dhanlakshmi, answer is no. See, transfer happens only when the property's sale deed is registered. Advance, you will also understand, is not the finalization of transfer. You may tomorrow not transfer, as we have seen in the first two questions, that the person paid advance, but the person did not turn up, so advance was forfeited. So eventually transfer did not happen. So the medium of making payment of advance only decides which date stamp duty value has to be taken. Okay, 2 more minutes, students, before I solve. Chalo. So now, students, what is the question? The question is, Mr. Ashish entered into an agreement with Dhaval to sell his residential house located at Navi Mumbai on this date for 80 lakhs. Sale proceeds were to be given in this fashion: 20 lakhs through account paid check, very important, 60 on possession, and balance after completion of registration. Now, Dhaval was handed over the possession on this date. So this is 15/12. And registration procedure was completed on 4/1. Okay. And this is 16/8. So these are the 3 dates, students. He paid the sale proceeds as per the agreement. So 20, 20, 60, whatever is paid as per the schedule. Now, the value as per stamp duty authority on this date is 90 lakhs. And on this date is 91.5 lakhs. Now, students, the first question, which dates stamp value has to be taken for the purpose of all future calculations? Okay, Dhanlakshmi. Okay, Vishakha. Okay, Gayatri. Correct. Yes, Garva, Arun, Harshal. Perfect. So everybody has perfectly identified. Here it is this. Why? Because the advance is paid through account paycheck, which is the accepted mode. Right? Now, Ashish had acquired the property on this date for 20 lakhs. After recovering the sale proceeds from Dharal, he purchased another residential house property in Kanpur for this on this date. Compute capital gain, inflation index is given. Okay. So this was 4. Question 5. Capital gain, Mr. Ashish, EY 2627. Again, this will be as per section 50C. Now, I've already written the note above, so I'm not repeating the note. So we know the answer that for the purpose of comparison, now we'll take 90 lakhs. Now your sale agreed is 80 lakhs, correct? So you'll compare 110% of agreement value, that is 110% into 80 lakhs, which is 88 lakhs with stamp duty value, which we have agreed to take as 90 lakhs. So whichever is higher, this is 90 lakhs. Expense is not given, so this is 90 lakhs. Cost of acquisition is of this date only. So it is 20 lakhs. Correct, students? Now, he has purchased another house for 15 lakhs in April. Is he eligible for exemption? So check the pointer relating to exemption, students. What is the pointer relating to exemption? So for the purpose of exemption, what we will check? We will check firstly under which section? It is under 54. Now for 54, what does the law says? Assessee should be individual HF. Yes. Property should be residential house. It is. You should have invested in another asset, which is a residential house. It is. And you should have done it within 2 years for purchase or 3 years for construction. But before that, if you want to go beyond the due date of filing returns, in that particular case, you should have done it by the way of depositing the money. But here we have done it a lot before the due date of filing returns. So all conditions are satisfied. So finally, I am eligible for exemption under 54, 15 lakhs. So taxable capital gains is 55 lakhs. Right, students? Any doubts, any questions, students? Yes, you're right, Garv. Great. Chalo then, let us take up next question, which is also the last question. Chalo, I think you should be able to do it. I give you 5 minutes. Yes, you got the answer. Okay, one answer I'm getting. What about others? Okay, okay. Okay. I've got another answer, but that is slightly different. Okay. Let's see if anybody else comes up with an answer. Okay. So, what is given? Raj, senior citizen, has sold unburned agricultural land for 75 lakhs on this date. Stamp duty value is 95 lakhs. However, agreement to sell was entered on this date, and Mr. Vipul gave 4 lakhs as advance through IMPS. The stamp duty value on this date is 85 lakhs. Now, Mr. Raj paid 1% as commission to broker. Land was purchased after 1st April 2001, so that is not a challenge. Also here, the cost of previous owner is also not required because it is not acquired under gift, will, inheritance. So none of that. And it is being used for agricultural purpose since the date of purchase. Now, he purchased another agricultural land which is in rural area on this date for 40 lakhs. Compute capital gain. Mr. Raj exercises the option to opt out anyways. It makes no difference in capital gain. Okay. So computation of capital gain, 69 years, so senior citizen. Fine. FVC, again, section 50C, note 1. Expenses on transfer minus cost of acquisition. Now again, working note 1. Calculation of FVC. Now firstly, which stamp duty value should be considered? Whether it would be 85 lakhs or whether it would be 95 lakhs. First answer that. Yes, students. Okay. Okay. Perfect. Great. So everybody has given the correct answer that the stamp duty value to be taken is over here 85 lakhs. Now this is to be compared with 110% of agreement value. Which is 75 lakhs, correct? So it is right. So it is expenses you have. Sorry. Now expenses on transfer is 1%. 1% of your sale consideration. correct? 1% of 75 lakhs. So 84.25 lakhs. Cost of acquisition is 10.85 lakhs. And there is nothing special in that. Correct, students? Correct? Students, have you all got this? Now, we check for exemption under 54B. Now, for 54B, you should be individual HF. You are asset transfer is agriculture land, purchase is agriculture land. It should be within 2 years. And for using 2 years, before due date of filing returns, you should have kept the amount in deposit. But that is not required because you have purchased it immediately. Most important, for this exemption, you should have actually done agriculture over that land for minimum 2 years. Here you have done right from day one. So all boxes are ticked. You are eligible. So whatever you have invested is to be subtracted. But here, students, I have a question. You have invested in rural agriculture land. Is it eligible? You have invested in rural agriculture land. Is it eligible? Hmm. Because rural agriculture land, students, is not a capital asset, you know. Yes, Garva, this is exactly what I'm saying. It is not a capital asset. That is my question. So, will the exemption under 54 be available in this case? That is my main question. That is my question. Will exemption under 54 be applied? See, interestingly, students, when you read the section 54B, it simply says you need to reinvest in agriculture land. It says nothing about agriculture land, whether rural area or urban area. It simply says invest in agriculture land. Now, when the law says invest in agriculture land, it means which agriculture land? The answer is any. So, even though it is rural agriculture land, there is no problem. And exemption is allowed. So, taxable is 33.40. Right? So, now I just expand this example. Let us say Mr. Raj sold the new agriculture land on 31st December 26 for rupees 65 lakhs. Now, students, what will be the situation? Students, what will be now my computation? Okay, Gayatri has given something. What about others? Now I have sold this new asset also. what will be special in my working of capital gain of this new asset? Why I have only 2 or 3 persons giving answer? So, Kambira, what did you mean say? I did not get what you want to say. You have sold this new asset. So now give me the consequences, tax consequences. Good. Logically, it is correct. But you are missing out on some excellent Gayatri. Then Lakshmi, my simple question is I have modified or I have added one more transaction in the question, as you can see on the screen. So now what will be the tax implication? How much will be the capital gain if you have transferred the new property for 65 lakhs? This is what I asked then, Lakshmi. Answer is capital gain nil. That is why I'm waiting, Arshal. I thought something will click to you. Why, Vishaka? That only changes long term, short term. So you have acquired it, sold it within 2 years, so it will be short term. That makes no difference. Why it will be nil? Why it will be nil, Vishaka, if you have sold it within 2 years? Reason, Dhanlakshmi? Reason, Dhanlakshmi? So, oh, now you are getting the googly. See, this is what happens in exam, students, that we are so much accustomed to solving that whenever we face a question, we directly start with the answering. You forgot my first question where I started. You have to always first check, is capital gain applicable? When capital gain will be applicable? When there is an asset and asset is transferred. Now you have sold it. So there is a is this a capital asset? Answer is no. Why? Because it is a rural agriculture land, which we all know is not a capital asset. Correct? And if it is not a capital asset, there is no capital gain. So even though you have sold it for 65 lakhs, you had got some exam, makes no difference. Now, I hope this is clear to everyone. Let me add one more. Chalo, I've added one more tangent to this. Gayatri 54F allows you if you have one house. Still, you can get 54F. So if you have sold your jewelry and purchased a house and you're already having one house, 54 allows the exemption. 54F. Yes, students, any implications in the hands of Mr. Vipul? Yes. Any implications in the hands of Mr. Vipul? Priya, beta, all amendments are posted on our portal. You have to go to the statutory updates part. See, for the purchaser, you have to always check if you have to check this. What is to be checked here? Stamp duty value, we have to consider 85 lakhs value. So the purchase price is 75 lakhs. Stamp duty value is 85 lakhs. You make 110%. So it becomes 82.5 lakhs. Still stamp duty value is higher. And if stamp duty value is higher, even by 110%, then gift is equal to SDB minus purchase price. So it is 85 lakhs minus 75 lakhs is equal to 10 lakhs. And this is more than 50,000. So this will be income from other sources in the hands of Vipul. And here Vipul is not any relative. Since Vipul is not any relative, right? But again, in gift, when you apply the gift provisions, when what is purchased by you for less than adequate consideration is falling in the specified property. Now, Kambira has raised a question. It is an agricultural land. Is agricultural land covered in specified property? Answer is yes. Specified property covers land, building, or both. Land means all lands. Obviously, had it been rural agricultural land, it would have been outside. But it is not rural, it is urban. So the first transaction is of urban land. Hence, this would be the implication in the hands of Vipul. So, Kambira, I hope you understood. There is a tax in the hands of Vipul. The gift income will be considered as 10 lakhs. Fine, beta? Clear to all students? Everybody understood all the aspects in this? Yes. And I hope I could clear or revise majority of the provisions, clear all your doubts, and most important, give you the approach which you should follow to get the best possible marks. Correct? So students, wishing you all the best for your exams. Today we also had our results, and there are some very outstanding results that we are having at BOS. So kindly follow us, kindly follow the lectures, try to be present live. Wherever you miss out, you always have a backup in the form of recordings, but making it live will be more beneficial. You can ask your doubts and things are more clear when you attend it live, because if anything is coming at the backdrop of your mind, you can immediately ask. So students, thank you very much for today. And please study well. Be in touch with your syllabus every day. Regularly revise. Don't miss out on your schedules. And I assure you, you will clear with the best flying colors. Thank you all. Thank you very much. Ashok ji, thank you very much. Good day, everyone. Session over. Yes, sir.